Hello there, Maverick Traders. This is Rob Reinhold. It is another weekend for the trading room. Last week in August, so let's jump into it. In this session, we're going to go over the news of the week. We'll take a look at the broad markets. Then we're going to go into the sectors and score them from +3 to -3. It's going to tell us where the best trades are likely to be found. And then I've got a bunch of setups for you in this session.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
So last week we had another bullish move. Now we had 4 up days and then one big down day on Thursday. But by the end of the week, we have been trading higher. We got the FOMC minutes on Wednesday, and basically it told us that a few of the members wanted to cut rates in July, but they didn't have more votes than the other side. But there was broad agreement on pretty much everyone across the board on the FOMC that there was going to be a rate cut in the next meeting, which is in September. And then we heard from Chairman Powell on Friday at the Jackson Hole Symposium, and he used the term, "the time has come," basically announcing to the world, to the markets, that it's here, it's going to happen, and they pretty much moved the bond market right away. Now, what I have here on the screen is called the FedWatch tool. It's on the CME Group website. So if you just go to Google, put in FedWatch tool, CME, hit enter, it's going to take you here. Now up here, you can choose the dates of the next FOMC meeting. So let's go look at what the odds are in the market based on the bonds, how they're trading, of there being a rate cut in the September meeting. Now currently, the rates are at 550. And you can see over here, there is nothing here. So that means that there is 0 chance that there is no rate cut. There's a 100% chance. And there's 63.5% chance that it is a quarter point. And there's a 36.5% chance there is a half a point cut. Now, if we go in and say, okay, well, what about November's meeting? Remember, we are guaranteed a cut. And I shouldn't say guaranteed, but the market is basically saying there's a 100% chance there's a cut. It's saying that there's another 40% chance of a cut, a 25 basis point cut in November, but they're pricing in pretty much a 50% chance that there's a 50 basis point cut in November. And then if we take a look at December, they are pricing in another rate cut. The market went from pricing in 1 or 2 rate cuts to pricing in basically 4 rate cuts if you were doing them by 25 basis points, but basically a full percent by the end of the year. This was much bigger than people expected. And so we got bonds came down, we had the dollar come down, we had gold shoot up, and we had a pretty good day in the stock market as well. Let's take a look at some of the economic news we got this week. Now, I do want to say this. The market has a tendency of getting ahead of itself. And if you remember earlier in this year, they were pricing in like 6 rate cuts. I don't know if you remember that, but back in January, they were pricing in 6 rate cuts. And the market had to back off of that when inflation kind of got out of control in February and March. I feel like we're doing the same thing, but this is where we are right now in the market. So what that means is that the market is now priced in 4 rate cuts or a 1% cut. If we get economic data that's stronger than expected, then the market's going to have to start taking some of that back. And that will likely hurt stocks, help bonds, and pretty much erase the trade that we just saw over the last couple of days. This was a very light week. We got unemployment claims basically right on expectations. We had some PMI information. One was lower, one was higher. As you can see, there wasn't a lot this week. Next week is another very quiet week, so I don't think this market is going to have really any danger from economic reports until we get into September. So let's go through the numbers of the week, and then we will take a look at the week ahead. The Dow Jones up 1.22%, S&P 1.45%. The Q's underperformed. And mostly the Qs underperformed on Friday. Friday was a really underperformance day for the Qs. The Russell boomed 3.5%. We are definitely seeing some broadening in the market. Oil down a little bit. Gold really hovering up near all-time highs as the dollar plunges to new lows. I want to take a look at these charts, and I really want to point out that the last 5 days have been very typical of August trading. Typically, August trading is really narrow candles where we just kind of creep higher, not a big range, and then all of a sudden one day there's some big panic, 1-2%, and then it mellows out and it will crawl up again with some small candles and then have a big down day. But I want you to recognize that it's going up the whole time. It's just a messy, 4 steps forward and then one big step back. If you're doing some short-term trading, that can be pretty tough. Like if you're like a 2 to 3 day trading window, this kind of price action can be really tough. If you're out a couple weeks on some spread trades, this kind of price action, nothing to be worried about whatsoever. As you can see, we are here right up along all-time highs. We're going into the last week of August. I just don't see, after this huge, massive run we've had, I think we got a base here. I think we're looking at some basing price action, but probably creeping up closer and closer to that red line. If we take a look at the NASDAQ, you can see underperformance here. We're nowhere even close to all-time highs. We're a mile away, and frankly, we're hitting up against some resistance. And take a look at that bounce on Friday. Very, very negative bounce here on the Qs. We do have some big news coming up this week. We have NVIDIA's earnings. This is going to either get the Qs back on board and up to rally to probably new all-time highs, or it's going to set the Qs back. Taking a look at the heat map this last week, you can kind of see that the big names, Microsoft didn't participate, Apple didn't really participate, Meta didn't really participate, Amazon. You can see that these big large cap techs didn't really help the market, but look at the green elsewhere. There's just a lot of green out there. This was definitely still a bullish week. Looking forward to the week. The way we ended, it's bullish price action. It's the last week of August. Probably we're going to see some more creeping higher, but we do have that big news earnings on Wednesday. Right now, the markets are pricing in about a 12% move in NVIDIA. If it is good news and NVIDIA goes up, I don't see any reason why the S&P doesn't at least push into all-time highs, if not make it to all-time highs. The NASDAQ is still really far away, but that could absolutely ignite the next leg of this rally. If this news comes out and it's not taken well, or it's good news but the stock doesn't go up, then it's really telling you that technology is still a lot out of favor. Now look, if NVIDIA goes down, it's going to pull everything down, even the S&P, even the Russell, but you're going to see the technology go down a lot more than regular S&P stocks. So you want to be overweight in non-tech stuff. And we've been talking about this really since the first week of July when we saw the underperformance of tech. Say, hey, you want to be in other stuff long. And we've been long in utilities, in real estate, in healthcare, and they've just done fantastic. One thing we do need to talk about is seasonality patterns. Every single time this year, I start to wave the flag or sound the alarm and say, hey, look, we are coming up on the statistically worst performing period of the markets. September 1st through October 15th are typically the worst months of the year. The most of the crashes that have happened in the market happened in the month of September. For the last 3 years, it's been like clockwork. Really, it just rolls over, and then on October 15th or somewhere around there, we bottom out and we run through the rest of the year. Every year, we've had this pullback. So here we are again, and guess what? I'm warning you about it. And over the last 3 years, I've said, hey, it's very likely to happen this year. I'm looking at everything. I don't think it's very likely to happen this year. Why? Because we had that big blow up just 2 weeks ago. That big blowout where people freaked out and panicked, and anyone who didn't have conviction, they bailed out. We've already had a flush out of some panic. So I think going into September, Look, I'm open to it, and if it happens, I'll react to it. But I think this time we're not going to see a flush out. That being said, could we underperform? Of course. We're just going to have to wait and see what the charts say. Over the last 3 years, the charts have been telling us in August, late August to early September, they were flashing warning signs. So we took this seasonality pattern and we paired it up with what was actually happening in the market, and we said, hey, this is a good time to be defensive. We don't see that in the market at the moment. We're going to keep an eye on it, but we just don't see it at the moment. So we have a saying at Maverick, trade the market in front of you. The market in front of you is bullish. Not a lot of economic news this week. We have some durable goods orders. I can't say people are really going to care about these. Probably the big one is going to be the core PCE price index on Friday. This is the Fed's inflation number they keep referencing. This has been very tame. This is one of the first inflation reports to really tame down. I don't see any reason to think that it's going to pop up and be a surprise to the market. If it is, I bet the market says, oh, it's just 1 month. Let's wait and see what happens. So I just don't see anything this week that is going to derail this +2 market. And that's what it is. It's a +2 market. Once we break out above all-time highs, we'll move to a +3. But right now, it is a moderately bullish market. So let's go into these sectors and see which ones are doing the best. Last week, we had some good gains across the board. Energy was the only sector that was negative. Best sector, real estate. We've been hammering on utilities, healthcare, real estate, outperforming. We've talked about financials also looking pretty good. As you can see, they all did fine. They didn't outperform. And I talked about how you'll probably not see utilities, real estate, and healthcare outperform. They'll probably market perform. They actually did outperform a little bit this week. Consumer had a nice run. And materials. This was the surprise to me. I had the materials sector as one of the weaker sectors, and it had a really nice move last week. I really want to see if it can hold on to that gain. If it does, I'm going to have to switch up some allocation in that sector. Let's go through all these charts one by one and give them a score. This one's pretty crystal clear. It's a +3. It's been a +3 for a while, and it just maintains a +3, just creeping higher. I mentioned last week we'll probably have less velocity to the upside, but I see no reason why this thing doesn't continue to hold in. Communication services. Got this one at a +2. We're getting close to moving to a +3, but you can see we've got overhead resistance. We don't have a 2050 cross yet. Okay, once those things happen, we can change to a +3, but this is a perfectly fine sector to be bullish in. Real estate was at a +3, and it even got stronger. It just got stronger, and look at this high base breakout. Just a beautiful high base breakout. Lots of velocity at the moment. The fall in interest rates is going to be very good for this real estate sector. On to healthcare. I said last week that healthcare and financials were my favorite sectors. Look at this. Look at how great this chart is. Look at Thursday's candle. Remember Thursday's market candle? It was a bearish engulfing candle. Closed at the low. This thing was already being bought while the rest of the market was panicking on Thursday. Buyers came in and rescued this thing back up even before the market recovered. And then on Friday, a gap up and a continuation. Yeah, this thing is +3 all day long. I still really like this sector. Coming over here to industrials, we had it at a +2, and take a look, it had a breakout. It had a breakout. All these lines have now steepened here. So we're going to move to a +3 on utilities. Seems some good price action there. And looky here. We have the same thing on financials. We had this resistance up here. It broke out solidly on Friday. We're moving from a +2 to a +3 on financials. Last week we had consumer at a 0. Okay, we're going to bump that up to a +1. It's a +1 sector. But take a look at the difference here. Look at the high that we had back here. This high all the way up here, we're a mile away from it. So this is not one of the stronger sectors out there. And take a look at technology, same thing. Got the same thing here. We're a mile away here. Yeah, it's finally above the moving averages, but it's not great price action. It's just not. So +1, that's where it is. This is the sector that surprised me this last week. Last week it was at a +1, and you can see we are knocking on the door. We are knocking on the door of that resistance. We're at a +2 right now. If it breaks through that, it's got to go to a +3. And energy, 0. It is simply just a 0. Of all the sectors out here, it is the weakest. This is where we were last week with real estate, healthcare, utilities, solidly +3. This week, 2 more sectors join that. Industrials and financials. These are going to be the best place to find your bullish trades. Materials moves up a little bit. Consumer and tech move up a little bit. But this is pretty clear where we are. These sectors are all very cyclical. They're very dependent on interest rates. These are likely going to continue to be strong as long as interest rates stay under control. And you can see these are just in the middle. Just in the middle, and poor energy is underperforming.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
Right, so that is a breakdown of the sectors. Let's go into our trades that rolled off this last week. We had 3 trades that rolled off. We had a good gain on Verizon, our neutral in comm services. That was pretty close to a max gain. Our consumer was a Dollar General, slightly bearish trade, and Dollar General had a pretty nice bounce. And Schlumberger was holding on, looking like a decent trade until the last day, and then it popped up a little bit, and that turned into a loss as well. So the market was not as bearish as we needed it to be for the ones rolling off, but guess what? We've got some nice ones still working for us on the bullish side. The market is still at a +2. We haven't moved to a +3 yet, so at a +2 allocation, we want to be right here. These are the slots available in our basket trading system. Where do we sit right now? And where do we want to add trades? As you can see, I've got some opening in utilities and comm services. So I want to be placing some bullish trades here. Now, I said this last week, I'll say it again. I think like utilities and real estate probably, they don't go down, but they probably don't have as much velocity. Real estate last week had a ton of velocity. I'm going to be adding in a +2 in comm services and a +3 in healthcare. I like that sector. And then I've got nothing in technology, so I'm going to add a sideways trade here to give us our allocation. So let's go into those sectors and talk about some potential trades. So first off, in the utilities. Utilities is a sector that's a little bit tough. There's not a lot of companies, and those companies are not heavily traded, so there's not a lot of weekly options. That's just how it is. So a lot of times I will have to wait to fill this utility slot. We're still like 3 weeks out for the next expiration. Okay, this one's going to be a little bit longer trade. So, but I'm looking for a +1. I already determined this is going to be a +1 trade in utilities. So I just want something that's looking like it's going to hold on. I don't need it to run for me a lot. I just need it to hold on. Here's a nice trade. We're getting a 20-50 cross. We've got a high base going. It's poking its head, or at least trying to poke its way out of the top of this. So I just want to do a pretty boring trade. Just a bull call spread, an 80-85. If this thing can go up above and close above 85 on that third Friday of September, that's going to be a nice gain. If not, there is no loss down below that 80. My max risk will be hit. So again, that is in the utility sector, NRG. Comm services is going to be a +2 trade. So now I'm looking for something with a little bit more momentum, a little bit more oomph. Now, I can't believe I ended up with AT&T because When I said you're looking for something with a little more oomph, this trade or this stock does not come to mind. Just take a look at the scaling here. This thing moves between 19 and 1950 or 1960 for pretty much the last month. That is not high momentum. That's not high momentum. But remember, options adjust everything for volatility. So as long as we think this is going to have a decent move, much more decent than it normally does, moving 30, 40, 50 cents, I like this on a high base breakout. I like this one. So I'm looking up to $20.50, which is going to be right up here. And I want to give this 2 weeks here. Give this 2 weeks to get up to that point. If it doesn't get up there, but it gets close, we'll have a nice gain on this. If it gets up above it, max gain on AT&T. I really couldn't find anything else in the sector I love, so I can't believe I'm doing a +2 on AT&T. That one's usually +1, 0, or -1. Healthcare is a sector I want to get more bullish in. Last week we took a +1 trade. This week I want to take a +3 trade. Now remember, +3 trades mean, hey, I need something with some oomph. I need something that's really going to go. This stock has been pretty wild. And just take a look at where it was, $9. $9, and then it runs to $42. And then it backs off to $21. And here we are at $30. Okay, obviously we found a volatile stock. There's no question this is a volatile stock. However, all the options are adjusted for the volatility. So what we need to find is just a trade that's going to work out. We want to do a +3 trade on this. +3 trade is going to be probably just these long calls. Now, whenever I do long calls, I like to give it a little bit more time. But if you want to dial that down a little bit, you could easily go with a 30-35 bull call spread. As you could see here, this is a very reasonable trade based on the range of this stock. And if the market does continue to move higher and healthcare continues to move higher, I don't see any reason why this stock isn't in the 40s by then. Of course, we have no idea what it's going to do, but this is a very reasonable play here on a strong sector. All right, and last we had a 0 in technology. So I'm looking for something that isn't going to move much. And I came across this Datadog. Back here a couple of weeks ago, they had this big plunge along with the market. It bounced with the market and then had an earnings report that it wasn't terrible, but you can see it didn't spark confidence. Since then, remember, the market has bounced pretty significantly. It came down and the market has bounced back up. Take a look at what this one has done recently. To me, it looks like this one just wants to hold. Moving averages have totally flattened out. This one fits the bill. There's no earnings. Earnings have just happened, and there's been really no move off of that earnings. So I think butterfly all the way here. If you're looking to go a week out, I think you can tighten it down and just do $4 legs. I'm going to go out to this September 6th, do the 115, 120. So again, this is slightly bullish, looking for it to creep up into this area. That's the area I want it to creep up into. So this is a slightly bullish butterfly in Datadog. If there's any other trades you want to share with the group, please jump onto the members area at maverickTrading.com, log into the forum, get some discussion. It was great. I talked to a couple traders that have actually met up from the relationships that they've found in that. Wow, I made that sound romantic. It wasn't romantic. It was just people talking about trading. That's what we want to encourage here at Maverick. Let's go ahead and wrap this up. I've got bullish consolidation most likely. Now, what does that mean? It probably means very similar to what we saw this week. One big day, and then two small up days, and then one big down day, and then a moderately up day on Friday. I think that's kind of what we're looking for. It's just more churning higher, but by the end of the week, it only went up 1%, but through the week, you thought it did much better than that, or thought it did much worse than that. Probably what we're going to see. This is very typical of August trading activity. I'm not a huge fan of this kind of trading activity, but remember, we trade the market in front of us, and we don't get to decide what it is, so we just have to trade it. I am going to keep talking about September 1st, October 15th. It's something we have to be aware of, seasonality patterns. We always talk about seasonality patterns when we get to that time in the calendar. We can't ignore it, but remember, we don't just jump to it. The price action has to tell us it's highly likely to happen. And at this point, the price action is telling us it's probably more bullish than bearish price action in the near future. But we will keep an eye on that. That is the trading room for this weekend. Everyone have a great last week of the summer. I don't want to call it the last week of the summer, but that's kind of what it is. But I know a lot of your kids are probably back in school, those of you that have kids at that age. So enjoy it, and we'll just keep trading. Goodbye, everybody.